And indeed, we have Mr. Bauer standing by, the CEO of Prosper Trading Academy. Thanks, Michael Keeley. Mr. B. All right, so now we've got a stock that is way behind its peers. Do you like the idea of a comeback story on this Thursday?
I like everything that Michael just talked about, and I think he's spot on. I think the report coming out here is going to be less about the numbers and more about what they say, how they are maybe reinventing themselves after, selling off the nano chip. And I think it's really going to come down to what sort of guidance they give, not even just guidance with earnings, but just kind of the direction that the company is going in. What I love what Michael said is this stock has been choppy. It's been volatile. Typically after earnings, the last few earnings, we've seen the stock maybe drift a little bit lower here. So I'm looking at that. I'm looking at the volatility. And for all of the viewers here, I'm also taking in kind of something that Tom White just spoke about exactly in your last segment, Oliver. I am selling next week's, this is not expiring tomorrow, but next Friday, the October 30th, 53.50 put spread, so $3 wide. Okay. And I'm also selling the 56.59 call spread, $3 wide. That's an iron condor. I'm collecting $1.50 for that. That is spot on with the number that Tom White was talking about, that when you look to sell like an iron condor, you want to get that one-to-one reward to risk, which this exactly is. And so what I'm looking for is this Intel chop that Michael was talking about. Maybe not so good, maybe not so bad, but essentially to be range bound. So my break evens, Oliver, and I know I'm going through this a lot here, but my break evens on this next Friday would be 51.5 to the downside, 57.5 to the upside. Anywhere in that range, I make money. Goes outside of that range, I know what my risk is, but I'm able to collect a lot of premium on this trade.
Okay, so you're collecting a lot of premium. You're looking at basically saying that for Intel, you don't want a big blowout story. You're well within the range. I mean, you've put this almost symmetrically on the price right now at 53.5. So yep. 57 would be the highest we've been since it gapped to the downside. 51 would be a pretty substantial drop that takes us back to where the month began.
No doubt about it. So technically, with these strikes as well, it goes right to what you're and I love the area in between here. But most importantly, I am completely risk defined. If we do get a blowout move one way or the other, I know what my risk is, and I will always trade that way.
Okay. All right. So you know the risk. You're not really skewing it in either direction. You do have some more room to the downside, right? I mean, arguably. Well, I guess it's about even, right? I mean, it's really, about even. Yeah, you're really not taking.
Almost right in the middle.
Yeah, you're not taking really a directional view here. All right, Scott, appreciate the trade as always. Looking to keep Intel within a range in about a $7 one that has well defined over the past month. Thanks to Scott Bauer, CEO of Prosper Trading Academy. Thanks to Michael Keeley.